Hello, Warriors. Dale Pinkert here at TradeGateHub.com. Our sponsor is TradeView Markets. Last week, I talked about shorting cable. I still think you sell rips. I talked about 25.50. So we had about 150 pip move. Could we try it again? It's possible. I wouldn't mind seeing the dollar pull back. It's been pretty stubborn along with the yen. But the dollar to me is good and will be one of the most hated rallies probably since the S&Ps in the last several weeks. So looking at the weekly off number for the Dixie comes in on this candle at 102.28. So with 102 being my line in the sand technically, if I could pick up some dollars at 102.30, which is, about 45 away, maybe that translates into, 125 on cable and maybe 109 on euro. Take a look at euro. Very weak rally so far. I know a lot of people want to sell it up here at 940. Maybe if it gets there, I'm a seller, but they might be left behind. Here are my longer term targets in euro and cable. I believe that we could see 105 again here, these lows, 105 in euro in the coming weeks or month. Still think you got to sell rallies. Where's this coming? 109 would be a good level, 109.10. Cable, initially looking for 121, 120. And then underneath that gets more serious, and you're talking about, 112 as a possible handle. So the dollar, most people are only looking for a retrace, if they are even looking for a retrace. A lot of people think that we're still going to flush one more time, but even the moderately constructed people, and I still believe the market's very short the dollar. This 2-week rally, I don't think shook everyone out because there's still skepticism. But the more moderate technicians and people I know think that we could rally back in an ABC fashion for a flat at 105.50. I think we could stop there. Eventually, I think we're going to break out over that. That's going to give us a shot up towards 110. The yen also due for a little pullback, but it's not over. We're going to see 140 handles. So being patient, waiting for a break there as well. As long as the yen is good, I don't think that you want to be long gold. To me, this pullback to the 19, now this comes in around 1915. This was a pretty important breakout going back to the highs. It may have been 2011, but I still think gold has some downside left in it to, beneath 120. Silver, a lot of people are watching broken trend line. To me, the important break was 24.50. And when I look at this through not quite a telescope, but at least binoculars, 22 looks viable to me. So this formation measured 23. So I don't think you start thinking about buying the metals until you feel confident that the yen rally has terminated. And the yen's pretty tightly correlated with yields. I talked about it last week when I was with you guys, and I said we had a breakout over 360, and we've had that. And also talked about the TLT potentially breaking down. And it's interesting, this is happening in front of the debt ceiling debate, whether or not it gets done or not. But if people that have been following me for a long time probably know what I'm thinking. And as you see, this RSI back in October confirmed the price move. So we have a confirmed low. So probabilities say that we could have another low. And I don't think the markets are set up for, first of all, taking away the easings that they have priced in mid-year, late year this year in 23. And I don't think they're ready for new highs in yields on long-term paper. And, people say, well, Dale, there's, huge net short positions in treasuries. We had the weakest manufacturing on record last week. Why are bonds going to go down? We're entering an era now. I read about this decades ago, to where yields don't go up because of economic growth. They go up because of too much supply and not enough buyers to mop it up. It turns into putting pressure on rates as debtors have to keep rolling their debt. And so I think that there's going to be some type of capitulation in TLT under 90 in the coming days. I think that should be supportive of the dollar. I think it's going to put pressure on risk eventually. As far as the S&Ps are concerned, this is what every bear is waiting for now, is 4,300. The patient bears, and I commend them. I wasn't patient. So let me just show you the line that could be a magnet for the S&Ps in the days ahead. I think we could get there. If we're going to do it, we're going to do it in the next 2 weeks up towards 4,300. So pay attention if this happens to stocks that are not performing in this last push. That's really the major things that I'm paying attention to. I still think we're not gonna get something done before the clock runs out, and I think there's going to be some market implications for that, and I think it's going to be risk off. So we'll see. Otherwise, it's going to be a buy the rumor, sell the fact that we get it done, and that's how you get 4,300. I have a lot of confidence. I thought that the dollar would turn after the stock market. There's an expression, if you get the dollar right, you get everything right, but everything doesn't have to turn at once. Okay, so stronger dollar has definitely put pressure on metals over the last few weeks. Certainly has put pressure on copper, which a lot of people have been bullish. I still see no bottom in copper. It's put pressure on some sectors of equity. I expect eventually it's going to put pressure on Apple. Apple, your goal signal is back in this formation under 170. So we'll see. We should have this also, we should have this resolution in Apple coming pretty soon. The VIX up a shade today, even though the market's up. One thing I can say is that we still are holding this low, even though we've made new highs. Monday, May 1st in the S&Ps, we were where? May 1st, May 4th, May 1st. We were up here. Okay, so we were here, and now we're here, and the VIX did not take out that low. S&Ps took out that low, but the VIX didn't. Anyway, I'm trying to rationalize my long VIX positions. But pay attention to yields. They're the big story here. And I think that, people that talked about a sovereign debt crisis, what was just a possible narrative many years down the line, is something that we're now confronting here in the markets. Because you look at other bonds, they're holding up better than governments, and governments used to be the best of breed, as my trading buddy Mike Venezia would say, best of breed. So good hunting in the markets. I'll be back here with Mike tomorrow. Main theme is buy dollar weakness and pair back risk. If I'm right about rates, in 1987, the market kept going up and up and up as the bond market kept dropping and yields kept rising. And it's called disintermediation. And it can go on for a while till you hit a tipping point. And then I knew guys that were, selling bond calls. And then when the crash happened, the bonds exploded. And it was painful for anyone that was selling calls during that period. So you never know when the tipping point is going to be, but that's what's going on right now. Disintermediation, especially if the market can hold together with TLT making new lows. So we'll see. Time always tells. Don't just count your pips, count your blessings. And join us at tradegatehub.com. Adios.